Hello and welcome back to the channel. If you're thinking about buying a home, refinancing, or just keeping an eye on where mortgage rates are headed, I've got the latest updates for you. Right now, mortgage rates are holding steady around 6.76%. That's basically unchanged from last week and right in line with where they were a year ago. According to the Mortgage Bankers Association, purchase applications dipped a bit last week, but are still up about 3% compared to the same time last year. Refinance applications fell more sharply, which isn't surprising with rates where they are. On the housing side, there's some encouraging news for renters and future buyers. The latest apartment list report shows new rental prices only rose 0.2% in July, and they're actually down 1.1% from a year ago. Vacancy rates have eased slightly to 7.2%. That suggests the rental market is starting to cool, which is often a good early signal for the broader housing market. Now, all eyes are on the Federal Reserve today. They wrap up their two-day meeting this afternoon and will release their statement at 2 p.m. Eastern, followed by Chair Kevin Warsh's press conference at 2:30. Most experts expect they'll leave interest rates unchanged, but markets are pricing in about a 1 in 3 chance of a hike. One big question is whether they'll signal any changes to their balance sheet or quantitative easing policy. Tomorrow we'll get the June PCE inflation report, the Fed's favorite inflation gauge. Analysts are expecting headline inflation to drop to around 3.7% from 4.1%, with core inflation easing slightly to 3.3%. Any good news here could help keep mortgage rates from climbing higher. Geopolitical news is also moving markets this morning. Oil prices jumped over 6% after reports of a missile attack on U.S. bases in Jordan. While the situation is tense, all missiles were intercepted, and the U.S. responded with targeted strikes. This caused mortgage bonds to dip a bit, adding some volatility. From a technical standpoint, mortgage bonds are trading in a pretty tight range. We've got support levels around the low 101s and resistance not far above. The 10-year Treasury yield is bouncing between roughly 4.59% and 4.71%. Today's Fed news could shake things up, so expect some movement. Bottom line, rates are stable for now, but we're in a wait-and-see period with the Fed and inflation data. If you're in the market, it's a good time to talk to a lender, get pre-approved, and stay flexible. Lower inflation readings could bring some relief later this year. Thanks for watching. Drop a comment if you have questions about your specific situation, and I'll see you in the next update. Stay informed, and I'll catch you soon.